What's up guys, DakotaJPayne back with another video, and today I'm starting or restarting the weekly trading review videos that I used to do. Probably one of the most beneficial things, at least for me in my trading journey so far, has been the trading reviews, the weekly trading reviews that I posted, and I was able to go back through those videos and identify what I was working on and what I was trying to improve at the time, and it just gave me a lot more confidence in myself to notice where I was improving. And 100% I hope this is also beneficial to you guys to to incentivize you to also do your own intense reviews. And I will say the first couple that I'm going to be posting, the first few weeks, are still in my beginning stages, and as I go week by week, you start to notice I get deeper in detail because I'm adding different things. I've learned to try not to overwhelm myself initially when I start something new, but to have steady progression, sustainability in the work that I do. But it will be great to see what I said I was going to work on and see if I actually did it so far, at least in these last 2 months, because right now it's July. So let's go ahead and check this out. So just so you guys know, what I use in my reviews is this app called Obsidian. It's a desktop app. You can also get it on your phone, but it's just a note-taking system, and it's uses Zettelkasten, which just links notes together. So if I have a trading idea and another trading idea, and I know like I've executed on that idea before, and I want to compare the two, I can link them together and go back and forth really quick instead of filing through a bunch of folders or paper notes that I have written somewhere in a journal. Right, it's a lot more organized and very, very useful. I love it. I'll actually talk about this all day. If you guys have any question about it, please. I love talking about that thing. But today, gonna go over the week June 2022, the 5th to the 10th. Okay, so summary. This week account ended with plus 1.82R. Took only three trades. One win, two losses. I've missed a trade, and in this review I'll talk about. It's kind of interesting. It was a trade that was based on like a thought, and it wasn't really based on my system, like written in my trading plan. But I didn't take the trade, but it was something that I was noting, and it was like, this is a possible setup that I can take. Now, honestly, since this, I have not seen this again. So, I also haven't like intentionally been looking for it, but the concept I do want to review. It's written down in my list of ideas to test and see if there's anything there for me to actually consistently use. But starting on Monday, first trade was Euro Swiss. Euro Swiss was a DSS limit after daily bearish engulfing play for a test of low of a weekly shooting star. I canceled this trade the previous week, but put it back on because price did not test my level. I remember this vividly. If there was a moment that I should have given up on the idea, it would have been the short retracement immediately after the break that came short of the shooting star low. Now I remember why I canceled this limit. The target was hit, right? So for certain setups, I should say, I can already identify the target before it sets up, and you kind of want to know where you're getting out, whether it's the upside or downside. Anyway, before you enter a trade. So if that target's already hit before it's even activated me into an entry, I'll typically, at least for this particular setup, I will go ahead and cancel that limit order that I have put in. And for that one, I actually ended up doing that. Like, I canceled the position. It was after price broke this daily level. I was looking for a round of retest just right on the daily level. Why right on the daily level? Because it was the low of the shooting star, right? It was a very strong level to me, so I was like, it was a very strong level for me. So I wanted to enter right on the daily level that I was paying attention to, 0361 or 62 if you want to round it up a little bit. And just looking for this retracement. So this was actually a nice JCP setup, but it didn't really come down here. I probably would have got stopped out there. But my target was this low, and my target was hit on this candle, and this was the point where I should have canceled the limit, but I didn't. Right. What I ended up doing, I actually canceled it the week before. Yeah, I canceled the week before this week, and I didn't clear my chart. Right, I didn't clear my chart or fully do my weekly trading trading plan until I believe Monday for the rest of the pairs. And when I got on this, I was like, oh, this markup looks really nice, great. Oh, I already have a setup here. I'm waiting on this setup. And then Sunday night, I'm like, let me put in my limits overnight. I still have this P&L set up on TradingView. Let me go ahead and put that limit order there. Why did I cancel the limit order? And at the time, I didn't have any notes saying this is why I canceled the limit order, which now I've gotten more detailed saying it, like basically every action I'm tracking. But this was kind of a problem when I first started doing this. I wasn't as detailed with my notes to say, hey, this is why you did this, and that's why that limit's been canceled on your statement. So let's go to the next trade, Euro AUD trade 2 on the 9th, which was Thursday. After liquidity play, I looked for a round of retests of last high breakout overnight and targeted high of pullback. Stop below engulfing last high breakout. Since the setup is similar to JCP level, the level I was targeting had a 69% chance of hitting target. This could have incentivized a larger size, but I haven't established a sensible method for allowing higher size or statistical edges. Now, this I have actually been working on intentionally. I do put more size on certain setups now, and just so you guys understand where my risk is at the moment, percentage-wise, I risk about 0.3%, 0.3, 0.5%, depending on the regular setups that I get on JCP and DSS, which if you can consistently watch these videos, you'll realize this. I'm not really going to... Both of those acronyms have very detailed, very long, detailed explanations as to what they are. So depending on that, I'll risk 0.3 or 0.5. And then for one particular setup, my favorite, which you'll hear a lot in the next few weeks or the next few videos, is the channel play. That's the best setup for me this year, and that's the one I'm risked the most on right now, which on my FTML account I risk 1%, on my personal account I risk 2%. And just figuring out when is it the highest probability, right? Getting more nuance with that particular setup, saying, oh, this setup had these characteristics. This setup, even though it's the same setup, it has certain different characteristics, and when these characteristics happen, it's more likely to hit this target, whereas if these characteristics happen, it's less likely to hit this target. That type of thing. It's a long, drawn-out process. You can do it in backtesting, but honestly, doing it live seems more productive to me. And I'm nothing like I still do that type of testing with backtesting, so I'm not saying not to do it that way. I'm not saying to take any of my advice at all. But if you guys do find anything helpful, go ahead and utilize it. And also, if you guys see if you see anything I'm doing wrong or anything I can improve on, please go ahead, comment in the comment section. I would love to hear, get second opinions on basically my analysis or my reviews and anything like that to see how I can do this better. And anyway, to stop rambling, I will, right now. Let's go to the next paragraph. Price came really close to stop loss on this position. Price hit right on the 61.8 fib level and stayed above engulfing thrust candle. I based my stop on any adjustment on entry will be based on hindsight. Any adjustment on entry will be based on hindsight bias for me. SL adjustments I'll look for outside. Okay, I remember this now. So your AUD liquidity pool, I was looking to preempt the liquidity pool, as I believe I talked about up here. If not, that's what I'd preferably do when I have liquidity pools. Get in before the liquidity pool is actually tested or overrun, basically when price breaks above it. And this was the level here. I was looking for around a retest of this area, and I believe I was looking for, that one was immediately retested, so that's why I didn't go for that one. So I was looking for a test of this level. Now price just kept, after price exhausted here, price just shot up above there. And after the breakup, I'm looking for an inverse, which is basically a test of the last high pre-break and targeting just the high above the liquidity pool. That's the idea here. I placed my stop below the thrust candle of the level that I'm looking to enter at. And let's see how it actually ended up. Of course, the R plus 3.82. But this is how the trade ended up. It was an overnight limit for me. And the thing that I was really stressing on towards the end is figuring out if there was a better place to put my stop. Because at the time I was really stressing over, I got this entry overnight, and overnight price just came like pips away. I think it was about 3 or 4 pips away from actually hitting my stop. And I was like, was there a better place for me to put my stop to give the trade a little bit more room to breathe? And honestly, there was no place based upon my rules for setting stops. There's no other place for me to put my stop. And just for clarity's sake, I don't put my stops below lows. I put my stops below specific levels, which there's no harm in actually telling you this. So I'll be explicit about it. I put my stops in this is how I interpret it. I put my stops below levels where, let's say if I'm going for long, I put it below the level, the last level that buyers overtook sellers. Okay. And how I identify that, let's do a simple example for buyers overtaking sellers here. Okay, so how a simple way of explaining that, or how I view it, is there are minor highs. So if you were to go to a lower time frame on this, so this is a basic impulse and correction. If we break it down from the things I've taught previously or talked about on my YouTube channel before, there's a minor high in between here because I see that if I went to a lower time frame, there'd probably be a minor trend here, and then price came down a little bit to form this red candle. So this would be the last minor swing high. Price broke above that level on this candle, and then when I say break above, I mean break above and close above that level, right? And since that's the last area that price actually, or that's the last area where sellers really took control of the market in some sense, and buyers really bursted their orders, which is right above this level, that is what I base my stop off of, right? I put my stop below this candle here, the candle that closed above that level. And that's learned from Tom Dante, Trader Dante. If you search him up, his content's actually really, really valuable. Probably, honestly, is it my favorite? It's, yeah, honestly my favorite content out that I've found on the internet for learning how to trade. And there's a lot of other ones that I like, but honestly I like his training the best, or how he interprets the market and actually how he talks. The dude is funny as heck. Third trade, June 10th. So this is your USD, right? This is a trade in July. That means my files are messed up. That's a shame. You know what? It's great that I have 2 copies here. So let's go ahead and do this real quick. Give me 1 second. Is this how I have to do it? Okay. Yeah, we'll do it like this then. I forgot how to like enlarge this. Okay. So your USD, here it is. Perfect. Yep. So I have my files set up as P2P, So everything that I do on my desktop automatically gets transferred to files on my phone, and I back that up to several SSDs because I lost some stats on a journal one time and could not get them back. I couldn't even go to the broker to get the statement back or anything like that, so I just lost all that information and just had like random screenshots from my Discord server that I was able to go back and review. So since then, I back up everything 1, 2, 3, at least 3 times. So Euro USD, long DSS, inverse opposing bearish engulfing candle. Inverse opposing the candle. I remember this now. Once my position had a drawdown of 30% without a reaction, I began to close the position, but I remembered I had 38% strike rate of bearish engulfing candles hitting 1x the range on EU. With that information, I decided to hold the position despite the daily engulfing candle closing through a daily level. At the time of this decision, I knew this information favored the stats. Learn when to favor stats versus candles. These stats do not necessarily mean that price won't continue in the direction of the bearish engulfing at the rate. It just considers price hitting 1x. I'll just explain that instead of reading the rest of that. So I did stats on this idea, which is a daily bearish engulfing candle and for Euro USD. And I did it over back until like 2005, right? 2005, 2007, somewhere around that time, from now till that. And I got 38% win rate. So at least on this trading idea. So with that in mind, I was expecting the idea to fail. So I decided to go long in the situation where I saw a potential inverse play, which was just basically what I just explained in the last trade. Test of a certain level, test the last time that sellers overtook or buyers overtook sellers. And clearly I saw that the market structure was telling me, hey, look for sales in the situation. And when we go down to the next time frame, I don't believe I had daily screenshots during this time, or was taking daily screenshots. But this actually closed through a daily level. And when price closes through a daily level, especially with a strong daily bias candle, like an engulfing candle, that's strong signal for me to sell, and I shouldn't be opposing that in that situation, right? So my markup was telling me look for sales, but I favored the stats that I gathered. Said, okay, the stats show that this is going to fail, so I'm going to go with that and just take this buy off of this idea. All right. So that was something that I kind of had to learn. If I'm going to include stats, I want them to coincide with what the market is telling me, which obviously that's pretty much common sense, right? The more influence you have across all bases, the more conviction you should have on the idea if it's properly tested. And I mean, that's what you want anyway. You don't want something that's half and half, telling you to do one thing and then telling you to do another thing, and you just pick a side based off of Phil. All right, that's kind of what this trade is to me right now. Is a trade based more off of Phil saying, oh, well, I have 38%, so instead of going with what the market's telling me, I'm just going to go the opposite. Because I felt like I did the stats on this should work. Anyway, that was already immediately retested, so that trade shouldn't have even been taken anyway. This was a limit. Oh, I see. Never mind. This is an incorrect level. Like I said, not as detailed on these first ones. Actually disappointing. All right. This entry level was right here at this level, and that was the level I was going for. That's why my entry's up there. And price respected that daily level and just tanked. Okay, Euro AUD. This is the mistrade that I talked about. Now, honestly, I'm gonna read this, but right now for me, this isn't a trade that I'm gonna consistently. I'm not bogging down to study right now. This isn't something that's at the forefront of my mind. It's definitely just me trying to be really, really smart. Let's go to the other one because I believe this one is better, and I gotta change the layout we got. got, right? Okay. Originally, I wanted to enter long on your AUD before the break of the liquidity pool. This is referring back to either the first or second trade that I talked about here, where I broke down how I ideally want to play that and how it ended up playing. I had to wait for a break and then retest. But price did not retrace to my level before that happened. I kept my eye on the level, and after price had dropped back below liquidity pool, I knew it was not a trade I was willing to take because price already went past liquidity pool once. I was interested in seeing how my order would end up if I placed limit order there, since I'm aware of a JCP long play on the daily time frame and price has put its exhausted low in. Due to uncertainty, I put imaginary target at first support level. Original idea would have never activated. Entry could have been focused around my highlighted engulfing candle since it was a clear point where tide of orders shifted. Why did I set my entry lower if I recognize this as an area where orders shifted? May not have been asking the questions I'm asking now. Stop loss would have been same. Alternatively, I noticed on a trade that I do not have notes on. Price came to 50% within support zone I recognized. Without concrete, that's getting too bogged down into detail, right? So, and I'll explain this. This trade was definitely more of experimental. Okay, explain this. So, like with these zones that I have, it has potential. And I'm talking about the 50% within a zone. It has potential, but it's more of a situation from my perspective now of fear of missing out on the trade, fear of missing out on ideas that come down within the area that I'm paying attention to, but doesn't hit my level exactly. So I was like, okay, it may not hit my level exactly every time, but what's more likely to be hit in these situations? So what I was doing there is just measuring, finding the zone that I'm looking for entries in. You can see that we got that rejection that I was looking for. And I would see, okay, within that, how far does price typically retrace within that zone? Or how deep does price typically get in those zones? So what I was doing around this time was measuring between these zones and putting down notes and stats saying, okay, when price got to this zone for this particular setup, it came about 50%, came about 30% or 70% within it, and whether it hit the level or not, marking that off, right? So that's a lot of detail to pay attention to, and adds another layer to pay attention to when I'm looking at zones. Now, there's potential there, but there are other things I need to work on at the moment that aren't necessarily the entry, right? Like a few things I need to work on right now are trusting my limit orders, particularly 2021. I missed so many orders because they happened overnight, and me and a friend were trying to figure out how can we set limit orders on our ideas because we had the same problem. We'd have all these great opportunities happen while we were asleep, which was typically during about London session, or I know for Aussie pairs for me, it was around 11 in London session, right? That type of range. So I experimented with ideas on limits, and I finally got down to one that's actually profitable for me and something that I trust. But when it comes down to it, to execute on it, I'm finding myself canceling the limits before I sleep, right? Which completely defeats the purpose of the limits. Now, last week I was very intentional about not canceling orders. There was one that I actually did, but that was for a detailed reason, which we'll get to in that review. Another thing I need to work on is setting stops. Like what I've shifted my system to is to go for the most likely profit instead of the big profit. So if you're in my group, when I first started the Discord group, I guess in posting anything online really about my trading, I would go for these huge return opportunities, huge R opportunities. which I definitely don't see often anymore, right? Or don't like definitely don't take advantage of anymore because I'm paying attention to different things now. But right now I'm focused on getting in and out as soon as possible, catching the rally and exiting within that rally instead of catching a rally, waiting for a retracement and rallies to continue to go on, because throughout that process there's giving back profits in situations, right? And I've taken this perspective of understanding that every trade doesn't have to be a huge runner. I still like look for huge runners, but that's not every single trade that I'm going for anymore. Incrementally scaling up the account and finding a sustainable way to scale up the account without exposing myself to a ton of risks or time. Being exposed to risk over long periods of time is how I want to word that. Getting rid of that factor where it is necessary or where I can. Alright, so that's this week. Hope you guys enjoyed. Again, second time I'm going through all these videos I'm going to be posting. So I hope this one is actually better than the first one, and I hope the audio is very clear. If you guys do have anything that you want to regularly see on these videos, please go ahead and let me know. By no means do I plan on stopping these type of videos, whether people like them or not, because this helps me out a ton, right? And if you guys do reviews like this, if you do it consistently and intentionally, I'm sure it will help you out too. So I will see you in the next one.